investors.
All right, guys, welcome to Agent Investor, the only brand that helps real estate agents get off the real estate roller coaster. If you're a real estate agent who's a little bit concerned about what 2023 might bring, if you're like me, if you were a real estate agent back in the day and had your income going up and down and up and down, and you were worried about when your next commission check was going to come in, this show is for you. We're going to help you and show you how to get off that real estate roller coaster. Again, I know how it feels because I was that agent back over 10 years ago. Since then, by investing in real estate, I fixed and flipped over 1,000 homes, built an over 300 unit rental property portfolio. I'm in the process of building a few hundred new apartments and have built an over 350 person real estate brokerage, all because I've invested in real estate. And today we have a special guest on today, a very exciting guest, our CFO Kevin Brown. And as I was thinking about introing him and thinking about, what value we're going to deliver to you guys and why this is important for real estate agents that want to get off the real estate roller coaster, I couldn't help but think back to kind of the beginning phases of when I started to invest in real estate and read that book that you've all read, that purple book, Rich Dad, Poor Dad. And in Rich Dad, Poor Dad, Robert Kiyosaki talks about the importance of accounting, the importance of setting up your books right, knowing your numbers, having to make sure that you've got the right accounting and tax set up. So by listening to Kevin today, we're going to talk about the importance of knowing your numbers, how he's helped to facilitate us knowing our numbers. We're going to talk about how to find the right tax professionals so that you make sure that you're getting all of the tax benefits that are afforded to you through real estate. We're going to talk about what he does within our business, but also take it a few steps back and talk about how you should be setting up your accounting and tax team from the very beginning. So Kevin, let's jump right into it. Let's talk about your background. So how did you get into this wonderful world of accounting that I started my career in too, right? I was a CPA back in the day. How did you get into accounting?
What's really interesting for me about that is that growing up, I wanted to be an entrepreneur. Mm-hmm. So I always had businesses from the time I was 13, on. And I went to Babson College, which was leading the country. And I think they might have been the only one that had an entrepreneur degree. And my father said to me, yeah, don't do that. Instead, play it safe. This was so, rich dad, poor dad here. Play it safe and get your accounting degree. And you'll always be able to find a job.
Yep.
And that job will pay the bills. So I listened to my dad and I got my accounting degree and then got a job. I worked for 8 years with the big firms, KPMG and Arthur Andersen, doing financial audits and business valuations and litigation consulting. And then I met with a partner one day and I said, I can't do this anymore. I actually want to get in and start helping people build companies. Mm-hmm. So instead of being the actual entrepreneur, I helped entrepreneurs. So that was sort of my middle ground. And I went into, operating companies, which was during the .com era. So my first 3 were all high-tech, early-stage, VC-backed companies.
Now, are you purposely trying to date yourself right now?
I am, to some degree, to show you that I've been around a long time and I've seen a lot.
Yeah.
And as I don't know if you can tell, but the gray here and the lack of here, I'm sure helped that as well.
Yeah.
But we did that, sold those companies, then went into, I didn't even drink coffee at the time. And I went in to work for a coffee company, thought I'd be there for a year and jump back into high tech. And I was there for 10 years. And we took a company from losing a couple of $1 million a year to making 20 million during that time, and eventually sold it to Aramark for lots of money. Went to the next thing, which was CFO of another 2 early stage high tech companies, which we sold, and then went into a marketing company, which we sold. And then I did my CFO, my fractional CFO consulting gig, which is how I met you guys.
Now, these companies aren't selling just to get away from you, are they?
No, I mean, they were all pretty happy.
They definitely sold,
yeah.
right? They didn't just tell you that they were selling.
No, they sold.
Okay, good.
Yeah. So really, I didn't stick with one thing. I was in a lot of different things. And most of the stuff I was with, I was actually working with entrepreneurs, people that, were risk takers, but very smart in what they were doing and built businesses. So that's kind of what I love to be around.
Yeah, and one thing I want to say, because your background is impressive, and for a lot of people that are listening, I want to be very clear about this. Kevin's our CFO. Most of the people that are listening to this will never have a CFO, and that's completely okay. We want to talk about accounting kind of in like, the way I think about it, like from our business, is like every year it gets a little bit like incrementally better, and it's helping us make better decisions in our business. And I think for a lot of people, when they read the book Rich Dad Poor Dad and they hear about how important accounting is, then they start working for themselves, and it just becomes like a chore. It's like, okay, in the beginning, a lot of times you're not even keeping books, right? And then all of a sudden somebody says, hey, you got to get your taxes done. And all of a sudden you have to do a whole year's worth of books in like no time. And it becomes this thing where it's more of something that you look at as a negative than something that can actually grow your business. So from the perspective of like working with us, how would you kind of look at what's changed since you've gotten here and how accounting can actually help people grow their business?
Well, first I would say I've worked in companies where accounting wants to create all these rules and processes, and it makes it more difficult for the operators to actually build the business. In my mind, that shouldn't be the role of accounting. So you should figure out how to best operate the business, and then accounting should figure out how to get the books and records done within that. Because you got to build the business first, or you don't have anything. So, accounting plays lots of different roles. I mean, you can't, you're always going to have lots of red, shiny apples, is what I say. The opportunities are out there. People are always going to bring you opportunities. If you can't find opportunities, I think you're not looking hard enough.
Yeah.
So the question is, which one do you take advantage of? And then, early on, you got to stay focused on those. So you can't then do 3 more when you haven't done the first one yet. So you gotta stay focused on one shiny apple at a time. And accounting will help you analyze those deals and forecast out those deals and see what the cash flow is going to look like and when you should be able to take a bite of another shiny apple. If you don't have good data in front of you, I don't know how you're making those decisions, because they will all sound good until you really dig in and start doing the numbers.
Yeah, and I think speaking from someone who is more sales and entrepreneur oriented than accounting oriented, I know that, at least for me, and I think a lot of people this is going to resonate with a lot of the people who are listening. It's like you feel like your gut feeling a lot of times is fact, but then when you actually start looking at numbers, sometimes that can prove to be incorrect. I think that's one of the biggest things that has changed since you've come on board with us, is like, we may think we're having a good year or a bad year, or doing a good deal or a bad deal. And then when it's out there, like black and white, there isn't really a lot of like feel to it. And I think good business owners and entrepreneurs they get a good feel for their business, and a lot of times they're probably making the right decision, but they're not necessarily always knowing. And then another thing that I think is so important that we do, and I don't mean to jump all over the place, but that we now have the difference between not looking back to say, okay, let's do all of our accounting and year end and see how we did, but we're actually looking on a month-to-month basis, and then we're also tracking the metrics that drive our business, and we're looking at those every single week. So can you speak to that kind of a little bit, and how that plays a role in our business, and how you feel it should play a role in anybody's business?
Sure. So the weekly metrics stuff that we do, that is, we have a plan that we set forth. Really, we have an annual plan, but then we do it quarterly. And as an example, we might say, this is how many homes we want to buy and sell in the next 3 months. And we'll have some metrics around that as far as dollars spent, dollars taken in. But really the driver of that might be the sales team and going out there and closing deals. Well, how do they close a deal? Well, go one step back. It's how many deals did they go on, and what percentage do we think they'll close? And you go a step back further as well. How do those appointments get set up? Well, there's marketing dollars that are sent. So there's drivers of just getting those original phone calls that you need in order to get to closing some deals. And so, we found, hey, on a weekly basis, that's something people are doing every single day, is they're talking to people on the phone. Let's track that. And we know from past history that they have to make X amount of phone calls will turn into X amount of closed deals. So we track that on a weekly basis because that's the driver of the business.
And this is where, as a CFO, you're talking, and you're going to talk about some stuff that maybe isn't where people are at today, but maybe it's where they'll be at 2 or 3 years down the road. However, KPIs are things that pretty much every real estate agent can and should track immediately. And we're actually doing a 5-week free, basically business planning clinic, where at the end of the 5 weeks, all throughout January, there's 5 Tuesdays in January, we're going to be walking you guys through how to actually create these weekly KPIs. This is something that it would be great to have a CFO or a full-time accountant in your business to help you do this. But this is an example of something that we're talking about today that you should all be implementing. And again, to kind of put my own personal spin on this is stuff that Bill, my partner, who's also a CPA, used to want me to do 3 or 4 years ago. And it's the stuff that I hated doing, because I felt like in my own head, well, slowing down to track your numbers is kind of a waste of time. But, again, the older I get, the more I realize that you've got to look at this stuff, and looking at it on a weekly basis is super important.
Well, it helps us also forecast our cash flow, right? As everybody knows, cash, I know everyone says it, cash is king, but really cash flow is allowing you to continue to invest in more things. And so if your weekly numbers are not on track, then you're not going to have that cash flow, at least in your forecast, coming in. So that's going to delay another deal.
And I think where it comes into play too is if your numbers are better or worse and you're looking at that every week, it allows you to make quicker decisions. And sometimes you need to make quicker decisions than you're probably making. If you're making a decision 6 months after there's a problem, that's a problem. You may not be able to correct at that point, versus being oh, the last 4 weeks have been super low for some metrics that's very important. We need to correct this immediately. And if you can't correct the revenue, then you've got to cut the expenses.
Yeah, there's not a lot of math here. Right? No. So, but it's nice knowing the math.
So I want to talk, we've kind of got 3 parts to our business. We have, the fix and flip business, then we have the brokerage business, then we have the, the apartment-based business, which has the capital raising component to it. And I want to talk because, again, people here, while they love to know how you do the debits and credits, the more important thing is like how you add value to the business and how accounting adds value to the business. So specifically, say, in the fix and flip business, what type of metrics are we tracking? What are we looking at? And how does accounting and having the right accounting make us better?
Yeah. So it is imperative that you have each individual project accounted for separately, right? You're not gonna make money on every project. You hope to, but I don't know anyone that's never lost money on some purchase that they did or investing that they did. So you got to know which one lost, which one made. So to start off, QuickBooks Online is a very simple tool, and it's anywhere between $40 and $50 a month type of thing. You can set up each project in there, and as long as you're tracking all of the ins and outs. So if you've got income from rental, great, put it in there as your income. On your monthly basis, you're tracking your outflows. On the flip business, your income. On your monthly basis, you're tracking your outflows. On the flip business,
sorry, you hear yourself twice.
Yeah, there you go. You're not going to have a lot of income, right? Other than until the sale. So you really want to track all the specific costs, whether it's your mortgage payments, your interest payments, your construction fees, all of that stuff. And the thing that we track very closely here is the renovation cost and the holding time. And I think the holding time is where those are two things you can control, but the holding time seems to be where people can slip. So you let it go a little bit longer, but every month you let it go, you have interest, you have utilities, insurance, etc. And those things, I mean, all that does is eat into your profit. So it doesn't help at all going longer on a project.
Nope.
The quicker you can flip these, the better. The more profit you have, the more cash flow, the more you can invest in the next one. And so tracking those things very closely. So one of the things we did here was we got a new software system that will start to really track the home throughout all the steps and the processes. And we made it easy for people with a mobile part of that so they can go in and we know when things are taking longer than they should.
So again, this is probably falls under the category of like, most of you aren't going to be here yet. And some of the stuff, like when we look at what we should be focused on, you always have to look at, what are the top 3 to 6 company things that are going to move the needle in your company. And for some of you, like building a software like this is not going to make sense. But talk a little bit about like how you developed that software, what the software was, and again, like how it's helping us.
When I first got here, I remember one of the original questions I asked was, so you guys had this thing called Deal Board, which was really, it was a database, but you couldn't really do much with it. It just tracked all the deals into, these are the things we're waiting to buy. These are the things that are under construction, and these are the ones that we're done and we're waiting to sell. But when I said, okay, from a timing perspective, can you add all that up and tell me when these things are going to sell and how much money we're going to take it so I can build a cash flow? There was no easy way to do that.
Mm-hmm.
And so we couldn't really forecast anything out. And so, and then the other thing that would happen is every time I would ask a question about why a deal maybe either lost money or didn't make as much money as we wanted, there was a lot of anecdotal information, like, oh, yeah, I remember that one. I think that was because we had a permitting, but we couldn't pinpoint anything. We couldn't go right to something and say, this is what happened.
Mm-hmm.
And so we researched a lot of different systems, and the one that we landed on was something called Smart Sheets. And it allowed us to be able to create tables, in sheets that kind of look like a big Excel spreadsheet, but then we can run all different reports off of it. We can create as many columns as we want. We can assign things to people. And so it allowed us to design a system that works specifically the way we do and run our business.
Yeah.
Which to me is huge, because I've seen other people try to buy ready off-the-shelf software and then apply their business to how the software runs.
Mm-hmm.
That doesn't usually work. So the fact that you can manipulate something so that it works within how you run your business, I do think that's an important piece.
Yeah. And so, we're talking about, how this is probably more advanced than kind of people on the call. And with everything that you do in your business, right, it's incremental. Like you're building a house brick by brick. In the beginning, it might be as simple as just making sure you have a separate bank account for your real estate business.
Yep.
And making sure that you have QuickBooks Online, and making sure that you have KPIs that you look at on a weekly basis. Like those are all things that if you're not doing those things, you could easily do them starting basically tomorrow. But your accounting, to me, it's no different than every other part of your business. And you want to make sure that you're improving every area of your business, because any big weaknesses in your business are going to cause you problems. And, Kevin mentioned, just us knowing stuff anecdotally, like, oh, I think that's why that happened, versus like, this is what's happening. And now we're actually able to say, oh, this is going to be a problem 2 or 3 months into the future, rather than trying to figure out after the fact. So let's switch gears to kind of the brokerage. Like, what are the key metrics that we're looking for? Probably a little bit more of a simpler business. What are the metrics that we're looking at in the brokerage, and what to you about the accounting in the brokerage is important?
With the brokerage, it's certainly a little different. We have another system that is specifically designed for the brokerage. And, that can be somewhat complicated, because you may have different deals with different agents or different caps and things. So having the system be able to do all of that is great. What we're able to do now is on a weekly basis, we download all the information from there. And we designed a very simple lookup in Excel, and we can learn who our top agents are. Not that you didn't know it already, but it's nice to verify that and not just anecdotal. But who the top agents are, who the ones that maybe need some help are, how much money we're making off of each one. So we can manipulate, again, that data. Average selling prices of homes we can look at, how many homes have been selling. We can see trends. We can look at all of that type of data to help us forecast out and know where we've got to spend more time.
Yeah. And then we look, from the brokerage level, probably the number one variable on profitability is just simply agent count. And, we look at that and we track that every single week. We look at that number.
Yep.
To say, hey, are we growing? Are we shrinking? What's happening there? And again, I look at the brokerage kind of it being a more simpler business, just overall, a lot less moving parts than like the fix and flip, especially on the accounting side. And then let's talk about like the long-term buy and hold, building apartments, modeling out the profit and losses there, raising capital. How are we using accounting for those?
So this, again, these are larger projects. Typically, when you're talking about the apartment buildings, much longer term. Our flips sort of probably within an average of 6 months type of thing. Listings can be a month, 2 months, but these could be a year and a half to 2 years of construction before you start to get occupants in there, et cetera. So you've actually got to do right at the beginning 2 separate analysis. One, which is building it out, how much money you're going to have to raise in order to do that. what the construction costs are going to be, what you think the rent out for. You got to do all that math, and then you have a whole nother P&L, which is when you're done with it and it flips to an operating company and you're actually running the apartment building. You got to look at that P&L. What are your operating costs, your mortgage costs, which is going to be your largest payment, and again, it all comes back to cash flow. So modeling that out over, a minimum of say 10 years, so you can see what that all looks like. You're going to need that to raise money from investors anyway. Investors going to want to see what that cash flow is going to look like. So having that model is crucial, and then setting up again a QuickBooks file that's going to track all of that and make sure that you're on budget. While you're doing that, because your investors are going to want reports on that.
Yeah, and
how you're doing.
I'm thinking about this out loud. Like we train a lot how to raise capital, and of course, I raise capital for these deals. And sometimes I think maybe I discount the fact that we have a lot of the stuff already set up, because for somebody to go into their wallet and say, hey, I want to put $200,000 or whatever amount of money into a project, they've got to feel comfortable that you know what you're doing. And it's kind of an interesting thing, because you can be the best front salesperson in the world, but if you can't pull out a P&L or a balance sheet, or you can't pull out financial statements, all of that kind of goes out the window. And so that goes for whether or not you're raising capital, or whether or not we would kind of phrase it as being bankable as an investor. And there are a lot of less well-run, well, maybe that's not even the right word, less organized companies that don't have their accounting kind of like the way it should be, not because they're doing anything bad, but because they just haven't focused on it. And then they go to a bank, to a commercial lender, to get what are the best rates, right? Like the best rates are commercial lenders that consider you to be a good risk. And sometimes these people, they have to go to hard money lenders because they're not bankable yet, because they don't have their accounting and their finances set up, or hey, they haven't filed their tax returns in the last couple of years. Just simple things that at the end of the day, you might not think about until you have to. And then the difference, like on these models of whether or not you can get a 5% rate or you have to get a 12% rate, it's enormous, the difference in the profitability just for having your accounting set up the right way.
Yeah, I think every investor, every bank knows that each deal has a certain amount of risk in it.
Yep.
The more that you can make them feel comfortable about the risk that they're taking, the better. And so when you're able to show them that you've fully thought this through, and you've got a pretty detailed model, and you understand what's about to happen, and you've got a budget in place, et cetera, I think that makes them a little bit more comfortable.
Absolutely. I mean, I get people that ask me for stuff all the time, and sometimes I look at what they ask me for and I'm like, I don't know if I necessarily feel like it's super relevant, but that's what they feel is relevant. Yep. To analyze your business, and it's their money. So I could disagree with it, but it doesn't really matter. At the end of the day, you can kind of pull out what they need, and you have it, and it's organized, and it's usually, much simpler from there. And I remember the process that we went through, again, just talking about going incrementally. When we first started, like we weren't bankable yet. Like on day one, we didn't have financial statements. Like we might have filed one tax return, and we had to go to hard money lenders. And now we have so many different capital sources. I mean, we're utilizing so many different options based on the need that we have. But for the most part, we're not having issues with any of the sources. I mean, all of the sources view us as a bankable entity, again, in large part because of how the accounting is set up.
And you've got history that can prove all of that, right? And show all of that. So, anybody that thinks they can just, come in and in 24 hours, they can start making these huge deals and, become bankable. It just doesn't happen. I mean, you guys have been at this for a while, and, you start small, you do one, then you do your next, and you start building up. And then after a while, it can really start to snowball. And that's where it really starts to pick up and you get excited.
So we've talked about kind of, what you've helped us with so far relating to the accounting and, finance setup and all that. What are some of the big things that you have on your plate for 2023 that you think are going to matter for us to kind of continue to take those steps to make things incrementally better?
Yeah, well, we've always talked about the stuff that is controllable and not controllable. And, this industry has been really just going straight up for the last X amount of years. And we've been riding that and probably not as focused on the expense side of the business, or not as focused on, making sure that we eke out every little bit of profit out of a deal. And 2023, I mean, I don't have a crystal ball, but it seems like it's, going to flatten out a little bit. It's not going to continue skyrocketing, at least in the short term. And so we got to really start focusing on those things and tightening things up. And so that's where accounting will really start to dive in and look at expenses that maybe we just hadn't looked at before because it wasn't a big enough dollar amount. Well, now everything's a big enough dollar amount. Let's get in there and really start tightening things up and running even more efficiently than we already are.
Yeah, me and you talked about this, and this I think is just the nature of business, right? When business is good, you expand and you take on some expenses that may not be giving you ROI, and then business starts to change a little bit, and you're like, wait a second, why do I have this membership for $199 a month that I haven't used in 6 months? And 6 months ago, it shouldn't have been the focus because saving $2,000 in a year meant almost nothing. And again, you can scale these numbers up or down to fit, however big your numbers are. But, you may have a membership for $20 a month that you're like, you were just so busy, you didn't have time to focus on it. And that's another thing. I think we've done this pretty much every year, which is like this last week of the year, to me, is a great time to not only plan for 2023, but to go through your budget. And we've been doing that for the last month or so, and just saying, hey, do we need this? Do we need this? Does this still make sense to utilize the service or whatever?
Yeah, most of those things you can always put back, right? Yeah. If the forecast that you did was too conservative and things are flying high, you put back those expenses.
So we talked about this offline, and I think it's kind of like a funny topic because I think a lot of people, they read a book or they hear somebody say, real estate has great tax advantages, and it does. And, a lot of us, entrepreneurs, we get into our head that like, okay, all of a sudden we're going to be in real estate and we're never going to pay taxes again. And there's going to be these like magical kind of mythical things. And there are some really great tax benefits, but what's the simplest piece of advice you can give to a business owner when it comes to finding out what those tax benefits are?
Yeah, find a tax expert in your area. The tax code is one of those things that it just seems like it's always changing. There's always some other loophole that's there, or there's some new rule that closed a loophole that everybody was banking on 2 years ago. And so those guys are special. I mean, they're focused in one area. Not every doctor's a surgeon, right? Well, in accounting, I'd consider myself more of an operational sort of CFO, but when it comes to tax matters, I will reach out to our tax professionals and talk to them, particularly on big deals. Talk to them, make sure that you understand the tax implications for sure. It's well worth the money.
Yeah, and this is something that, going back to the Rich Dad Poor Dad Kiyosaki advice, he actually has specific books with his advisors. And, you want to know some stuff, I think, about the tax code. You want to have a general understanding, hey, what's a 1031 exchange or what's depreciation. But at the end of the day, you can't be an expert in all of these different fields. And if you try to, and you're spending most of your time thinking about taxes, you're probably not spending your time thinking about revenue and growing your business. And one thing, to just echo off what you said, that not every doctor's a surgeon, not every CPA who does taxes knows real estate. So I would specifically want a referral. And if any of our listeners need a referral to a good tax person that knows real estate, just reach out to me directly. But, people get good at what they work on. And there are entire tax practices pretty much dedicated to working with people in real estate. And I'd be cautious about not just asking, hey, a friend for a referral, or definitely just don't walk into an H&R Block and expect that you're gonna, have get the best kind of guidance. When you're a business owner, you want to make sure that the person who's doing your taxes is a specialist in your particular industry. And like Kevin said, he's been in accounting for a long time and he's not a tax specialist. So be careful thinking and this goes with every type of advisor. I used to think this incorrectly when I first started, hey, you're an attorney, so you know how to do closings and you know how to do litigation, and then, you realize, but if you don't know that yet, you really want to have as much specialization as possible. So what would be, if you had to give, because you've worked with a lot of startups and a lot of people who are listening are newer to being business owners and stuff like that. What's the best piece of advice related to accounting or finance or taxes that you could give to somebody who's in that beginning phase of growing or in their first couple of years?
I would say probably just making sure that everything is analyzed, tracked, and it's all about cash. In those beginning years, it can be very difficult to find cash. So when you have it.
Where do you recommend looking for it? Is there a specific place?
It can be very difficult because, at the beginning, borrowers won't, banks are tough to go to. Everybody wants personal guarantees on stuff. So, if you're young and you just started out and you got your own personal house, people are going to want you to put that up as a personal guarantee.
Yep.
That's why, I'm always amazed with entrepreneurs because, people will say, oh, they got lucky. That's how they didn't get lucky. They went out there and they took the risk. There is risk here. That's what's very impressive about entrepreneurs that are going out and doing that, is they're willing to take those risks, and you're going to have to. But cash isn't always going to be there for you. Be smart with it and watch every penny. Do some stuff on your own. If something needs to be fixed, fix something on your own if you can, rather than hiring an expensive contractor. Really cash, because that is what's going to allow you to invest in your next property.
Mm-hmm.
And at some point that will start to snowball. But watch the cash.
Well, I want to thank you for coming on, and I want to remind our listeners, obviously we do all of this stuff, training on a weekly basis. We give you guys a lot of tools for free. But if you're serious about taking your real estate investing business to the next level, I'd like you all to at least take the opportunity to jump on a call with me to discuss the inner circle. You can do that by going to www.agentinvestorinnercircle.com. And we'll jump on a call and we'll talk about specifically what your real estate investing goals are. And we'll put together an action plan of what you can do in the next 12 months to actually achieve those goals. Now, if you want more individual one-on-one help, if you want to partner with us on deals, if you want access to all of our systems, all of our resources, all of our staff, If you want us to go on face-to-face seller appointments with you, help comp properties for you, and really treat you like a partner in our business, then I would recommend strongly jumping on that inner circle call. We can talk about whether or not you're a fit, whether there's a mutual fit for both of us to work together. But if you love what we do for free and you want more help and you want to move faster in the business, again, schedule a call at www.agentinvestorinnercircle.com. For those of you who have listened to me before, I mean, I've paid hundreds of thousands of dollars in coaching myself. Coaching is a shortcut. There is nobody who's on this call that can't figure this stuff out all on their own, but working with somebody one-on-one, it's a shortcut to your success, and it can help you shave off years of what it takes to do on your own and prevent you from making mistakes in your business that can cost you in real estate hundreds of thousands of dollars, if not millions of dollars over the course of your business. So again, if you're interested in jumping on a call, getting a free strategy session, and learning more about how to work with us on an individual basis, go to www.agentinvestorinnercircle.com. Kevin, what else do you have going on for today? Anything good?
Nope, my day's over. I'm done.
Beautiful. 11:45. You're done for the day. Pretty good gig. I should have become, or I should have stuck with it, I should say.
Well, thanks for having me.
Yeah. All right, guys, we'll be back again next week with another episode of Agent Investor. Again, Agent Investor is the only brand out there that helps real estate agents get off the real estate roller coaster. Stop worrying about when your next commission check is going to come in. Make sure you have passive income coming in each and every month to offset the commissions when they're not there. All right, guys, we'll be back again next week. And Kevin, thank you for jumping on. All right, bye.